All right, Doc here from North America. Good morning, good afternoon, and good evening. Another fun-filled day. It's Thursday. We're only one day away from TGIF. And let's see, we have everything up there. Yes, we do. There we are. We got the fact check spreadsheet up there. That's there. And what else have we got going? I guess that's about that. All right. Let's see. Let me check. Oh, let me check the volume. Make sure we got the volume. Oh yeah, we got the volume. All right. Pump up the volume. All right. All right. Now let's zip over to the Swiss pairs trade of the dollar. Right there, you can see it's moving up a little bit. Again, I guess, was that the Monday? No, I guess that would be Tuesday. And then went into the buy on, how come we don't have a little green line there? I thought I put that in there yesterday. Sometimes it just loves to disappear on me. And then it's just to remind you. I mean, all you have to do is look at the black histogram and the white line, and you know that it's in a buy. And when it's below, it's in a sell. And when it's below, it's in a sell. And when it's in a up, it's in a buy. And when it's in an up, when the white line and the histogram are plus above the zero line here, it's a buy. And when it goes below it, it's in a sell. So we just do that. Same thing on the weekly. We just try to help some people out going, okay, where's that at? Is that really there? Is it small? Is it close? Can't tell. And so that's where we are. So you can see we went into the buy here, and it's not really doing any exciting move. It's just obviously the dollar is showing firmness with all the strange stories and everything else going on right now. It's the whole marketplace is jumbled and all over the place. This Biden situation really has things really rocking. I'm not sure exactly in which direction that they're trying to tell us, but you can see one thing's for sure: money is trying to flatten out. I don't really see 1% down as anything exciting when we've seen 1,000-point moves and 2,000-point moves on the Dow. It's awful hard to take a 100-point move serious or a 300-point move too serious. So I try not to get, I try not to get too nuts over these things. So, or at least as a trader, I try not to take it too serious. I just know that there's some action, and that's what it is, just plain ACTION, action, action. All right, so you can see there's the euro. I'm sorry, not the euro. This is the Swiss franc against the dollar, and let's put it over here too at the same time on J4X. Right there. There it is. Nope, not there. There you go. Wow. They're doing the labor numbers. Sound like they came out okay. You can see here on the J4X, you can see the same thing. You can see it's trying to move up. That means the dollar is going up in value. And we've seen a lot of the products, kind of trapped more than anything else in sideways action and nowhere's direction. Our math is keeping us honest in the sense that we always watch the weekly and the daily, combine the two together, and it gives us a solid direction. And sometimes, as I always say, let me try to say that again. As I usually say, there's three positions you can have on. You can be long, you can be short, or you can be neutral. You can be dead down the middle, flat or neutral. There's a couple ways of doing that. And right now, you have it here. It was in a weekly sell right there. It's trying to go back into the weekly buy with no problem. You can see it's been like that pretty much most of the week. And you can see here, this day right here, we just missed it, and then it confirmed it here, and it's trying to do it, but it did not take out yesterday's high. But it is firmer today than it was yesterday, just a smidgen, So now let's jump over to the euro, unless someone wants to see anything particular, and if not, we'll just march into the euro. And there is the euro. And you can see there trading 117.05 on the J4X. You can see the pressure has been on it for a couple of days. And when we go over to Chicago Quant, you can see the same situation. Pressure. It's been in a daily sell for 3 days now. This is going to be the third day. It's been moving down. It's been in a weekly sell for a couple of weeks, so the pressure is downside here, something that actually is defined in a direction. Like I said, a lot of times in this strange situation, we get markets going into sideways action. What an insanity that was over like a 8-day period where it went in and out, in and out. You couldn't take the longs, of course, because we're in a weekly sell. But the weekly sells were not exactly. I mean, that one did not make money, or it made it. It just broke even. This one barely made money. And this one, where did that? This one took it hard on the chin. So what happens in the end result is, out of all those sloppy moves, now the do-re-mi is coming in from it all. And it always does. Our math always, in the end result, overtakes any of the losses and makes back the money. So there we are. Let's see, what else can we say about the euro? I don't have a much stronger opinion than that. That was really weird stuff. We saw the same thing in silver, too. Silver was doing the same thing. And it was very strange to see these in and then out, and then in and then out. So let's jump over to cable. I did see the cable is pressing down. It went to the sell yesterday, and it is off its close easily and moving down. You can see here on the J4X, the same situation. We'll see in a second. There it is. Woo! Yes, it is. Okay. And you can see it's the same thing over here on the fact check spreadsheet. You see there, all three of them, even the Aussies in a daily sell now for a day. 1 day for the cable, 2 days for the euro, 4 days for the euro GBP. You can see here the pressure is on right there. Quiet day again. Yesterday was quiet. No one was asking any questions. It was quiet. I guess everybody's getting, smartest thing a trader can do at this point is, when in doubt, stand to the side. Don't get involved. That's my always recommendation. And you can see here, though, what is this? Cable. Cable's trying to get into a weekly buy with not much of an effort. It seems to be lifting up. Let's go back and see the last time it did something like that. The way it just started to reach. That's interesting. This was like very firm, very quick. So you have to believe, in my head, I gotta believe that we're going to see something like that again, at least the 132 area. Just with that action, even the low end of the range is like 131 and a half, something like that. 130, 130 and a half, right around there. 131, 130.75. So it just seems like it's trying to get some action. Now, all we need, traders, all we need for that is we need a daily buy. Let's widen that out. You can see here, this is saying, So it's stuck in the neutral. This thing's trying to climb through. And what are we getting out of this? Is we're getting some, weakness in here. So it's very curious. On a very short-term basis, over the last 4 days, it's come down off of that 130.75 area. Down to, what was that, 128 and change, 128.75 area. And now it's trying, the weekly is trying to lift. And if this does not lift, the weekly will start to roll over, I imagine, and we'll see some action. That's usually the way it works. So I try not to tell the markets what to do. They always tell me in the end. Every time I try to tell it, it doesn't listen. Okay, where do we go from here? Since no one's asking any questions, we'll go right to what I refer to as dessert. The Turkish lira, fascinating product to watch. Fascinating. Too bad the options is not liquid. Ooh, getting closer, but I think the all-time high was yesterday, right? I think we keep on waiting for that 8 handle to occur. So far, no go. And you see here, that was yesterday. We got up to 79 or 7.99. Was that 9994? No, wait a minute. That's a 95er. What is that? 795. Okay. And so that one was 795.74. So that's the high right there. So it failed yesterday to touch it there. Did it? 75. No, I guess it did. No. This is 7. Yeah. So it made a new high there of 795 by the hair of its chinny chin to 94, almost 796. Still hasn't touched the 79.99. Can't get that action there. Hey, 47, how you doing? And Cody, good to see you. What's the program called that you're looking at right now? We look at two programs here. We look at the Dukascopy J4X right there. And we look at the multi-chart with my algorithms implanted in it. So, let's see. Where are we heading from there? So, first of all, 47 says, let's take a look at the S&P. So, let's go to the S&P. And I hope I answered your question there, Cody. Where's the S&P? Right there. You can see here it went into the sell yesterday and it's smacking down. You can see we are still in the weekly buy, so it's more of a neutral position. One thing is for sure, you don't want to be long. That's a very clear, indication. Do not be long. But being short, the only way you can be short is if you're doing options. We don't recommend doing any hard delta unless the weekly and the daily are combined together. So in other words, don't be short the futures unless we're in a weekly sell and a daily sell. But if you're in a daily sell, you can do an option spread because it has a limited risk factor there. Did that help you out there, Cody, with the answers to the two different programs we're looking at? And that answers 47 at the same time. Okay. Now, and what do we do? Oh, where we left off? We started looking at Turkish lira, right? Oh, that's right. There it is there, Turkish lira. So we'll see what they do with this. It's been in a long trend of up week for anybody that's new here. We try to remind everybody every second day at least about it. I know I didn't say it yesterday. 45 weeks now in a weekly buy, 12 days in a daily buy. This thing seems to only have one real direction, and that is up, up, and away. Now, 45 weeks in a buy is, we're only 7 weeks away from 1 full year. So, oh, excellent, Cody, excellent. So, oh, here we go. Wait a minute. Oh, right. I'm working on ML for trading myself right now, building a RL agent for crypto to do. Do you share any of your algorithms on the GitHub? No, I don't. And yeah, nice. Where was I see. Nice. Okay. We do follow. We talked to someone about the cryptos, and we do follow them on some level here. We have our math in there. Where's it at? Crypto on the wall. Let's find the November contract, or is that the October? October. There it is right there. You can see here. The crypto is that right? No, that's platinum. Sorry about that, traders. Let's go find right there. I just saw it again. There it is. And you can see here, it did slip into a daily buy for a couple days. We don't really pay attention to it too much. I look at it every night and throw it on the spreadsheet. It's that's the sell back a while back, right there. And then that was the buy right there. You can see it right there. That is the buy right there. You can see a sell here. I guess that was a sell. That's a buy. There's a buy here. Didn't go to sell there. Did it go to sell? It went in the sell right there. And then went right back into the buy the next day. We'll clean that up for you. We probably erased the other expiring contract. That's why we're fixing it again. And so we go like, oh, let me just double check to make sure the histogram was minus. 33, yes, it was minus. So this is going to sell. And then it goes right back into the buy again. So went into a sell here. Let's see. Still in a sell there because the red dot. And then we get a green dot the next day, but this is minus, so it's still in a sell from here. That was a weekly signal there of a sell. There's a weekly signal on a buy, and I think we're so far doing that. So I'm more into Forex personally. I don't blame you. We follow on the Forex. We follow all these. We'll just give you a quick view, like euros, Canadian cable and ruble and yen and yen, dollar Turkish, dollar Swiss, Aussie dollar, euro zloty. Where's that? Euro zloty. We follow euro GBP, euro Aussie, New Zealand, both New Zealand CAD and New Zealand dollar, GPY yen, GBY Mexican peso, dollar RAN, cable New Zealand. What else do we have in there? We do keep the yuan, the Chinese yuan in there, but it's not really an active product. Dollar Mexican peso, and then Aussie yen. So we do have those, and we can show you if you have something you want to look at through the eyes of our mathematics. We can easily just put one in, and we can take a look at it for you. So, and that's cool. You know, this is a currency, mainly a currency and commodity, like, you know, mild commodity like oil, natural gas, gold and silver. I think they have soybeans, they have copper. So they do a little of the commodities here, and then mainly it's a currency webinar. But I do both. Right arm, I hear you. Right on. All right. Let's see, what else do we got going on? And if you want to, like I said, if you want to see something, just put it up on the chat line and we'll put it up there. Because I really do enjoy adventurism, and it's really nice to take a look at a product and you know, something new or different or something we don't usually follow. I mean, like, we weren't really following some of those things, like the RAN. We hadn't looked at the RAN in weeks, months maybe even. And then someone a couple of days ago said, hey, you know, I'd like to see the dollar RAN, and then we saw this pattern start to develop out of it. We put the lines in, you know, just to double check. You know, it had been in a cell on a weekly basis for a while, I guess, right from here, from this area here, that week, and that's the Friday of the close. And we always put the confirming weekly signal in on the Friday itself. And you know, you could see it was trading Monday, Tuesday, or Tuesday, Wednesday, and Thursday in a sell. It was in a daily sell right there, and it tries to go into a buy, but you've got a red and a green. You can't take the buy until the next day, and obviously the next day doesn't give it to you. It goes right back into the red, so there's still a sell. And that's how we just, you know, it's fascinating to see other products that we don't really watch. So we're always happy if you come up with another one. Brent, I don't know if I can't get Brent because it's on ice, but we do have, where's it at? We have crude. And crude tried to go into a daily buy last night. That's gold. Where is that? Right there. And so we've been in the sell since here. It was a red dot when we went in there. I'm not sure why there's a green one in there. But we just left that in there because it was in the sell. And you can see we went into the buy that day too. That must have been a Friday. And then what happened was now we've gone into, you know, we were sell there, so you can't take the long. And you can see here we're still looking like a second week in a buy at the end of this week. And it's been above the zero line here. But the dailies kept you out of this trade. Now yesterday they tried to, and at one point we had a green dot. We even put something in trend line and on bar charts and the whole bit, but it just flipped again, you know. The letters are zones, and I think US CAD. Let's take a look at US. Oh, wait a minute. Oh, hey, 9-pack, how you doing? Let's see, I'm using Dukascopy to download Forex data, so I came across the channel. Smart, very smart. Yeah, I've been using Dukascopy for a while. You know, it's a good tool. You know, it's backed by Swiss Bank, so it's got, you know, some, you know, legitimate data coming in. 9-pack, hi, how you doing? Could you introduce the Excel on the left? How does that work? Especially, what does the letters mean? Aha! Okay, and at the same time, I'm going to throw Canadian up there for you to look at, and then we'll go after Canadian after we explain the spreadsheet. Right, there's Canadian, so you can look at that while I'm explaining the spreadsheet. Now, the spreadsheet, up at the top, you'll see here, it shows the date, which is today, and then what happens is that you have a weekly buy, WB, or a weekly sell, WS, or a daily buy, a buy, or a sell, okay? And it tells you how long it's been in that trend. So we'll use Canadian as an example. In the case here, it was in a daily trend up until yesterday, and it went into the buy yesterday, and I didn't put the line in there. There it is. And so when we go over to the Canadian site, line 20, you're going to see it's 3 weeks in a buy, right there, 1 day in a buy. And so you can see here we put it in when it went into the buy here at the end of the week. So it went into the daily buy here, and then the line had jumped across the zero line. Histogram was up, and it gave you room to be long. But we don't put a confirm in there, and the signal itself is not really confirmed until the end of the week. But if you're just flipping it in and out, it's safe to play. And if you're using options, it's very safe to play. All right, then you can see we go into a sell here, and then we had a sell for like 1, 2, 3, 4. I guess what was it? 1, 2, 3, 4 days. Then it went into the buy here. So on that spreadsheet, there would have been a 4 in this box there. And at that time, we probably had just a 1 where the 3 is now. And so it's been in a weekly buy since here, in this week in here. And so 1, 2, 3, and you see a 3 in the weekly box right there. And so the spreadsheet is recording. We put our history in there. So that's what we're doing there, is we're recording the history of our algorithm, and we put it in there each day. And so you can look over to a spreadsheet and you go, let's say you turn on the webinar and you're not in the mood to talk, but you're in a mood to figure out where is silver. Last week it was 6 weeks in a sell, and it's 2 days in a sell right there. And so you just look on the spreadsheet for whatever product you're following. I fill in most of the dailies. I don't do them on the grains, and I don't think I do it on Bitcoin, and I don't do it on DAX, and I don't do it on the FTSE. But everybody else has. Oh, and I don't do it on the dollar index either. So it's 4 weeks in a weekly buy on the dollar index. You can see here Turkish lira, 45 weeks in a buy, 12 days in a buy. Ruble, 15 weeks in a buy, 1 day in a buy. Let's take a look at the ruble as an example. Right there. And so you can see there, it went into the buy yesterday. You see the strength there. It's been in a weekly buy all the way back here. And each week we just as long as it's in a weekly buy, it just counts up as another week. And that's how we follow that, like that. And I just threw the daily in there. Does that make sense to you, 9-pack? And for Cody, can you explain your charts for me better? What data are the lines based off of? Okay, so what we do is we have a formula that we call the shape and value of time. It measures all objects moving on any particular surface. I guess I describe it as a surface. Okay, and so what we have is the purple lines here are what I refer to as my nonlinear time manifolds, fractional time manifolds. It's a four-dimensional time manifold that I invented. The histogram and the white line are an average of my formula, and the histogram is a standard deviation. Not the histogram. The time manifold is a fractional math. It's a spatial form of our formula. So we're taking my formula and we're introducing different concepts to it. Then we do it on a weekly basis also, same identical way. And so you're looking at, in this case here, 1 is the histogram. It's an average. And in this case here, gas line 3, it's a 3 average of my mathematics. Plot 4 is the white line. It is a 3 average of my formula. And then what we have here is the time manifolds, and they are a standard deviation, a combination of stochastics of my formula combined together. And let me think, what else is there? And then plot, which was so plot 5 is a crossing pattern of the two of them. We just keep it invisible. It's not worth looking at because it's just it's repeating itself in a sense. Hey Janos, how you doing? Sound is comparatively low. That's odd because I can hear myself really well here. Huh. Okay. How about now? Is that probably better? Let's see. Sound is comparatively low, but don't go messing around with it now. Everyone is there. Speakers up. All right. No problem. So there we go. I developed my formula to compete against the Higgs boson back in 1977. And so you can see sometimes the numbers can get incredibly small. Let's see if we can find it. Like here, that's not too bad. But when we get into something like the yen, it gets really wacko. I mean, we get the, like 4 and 5 digits minus. Let's see if we can do it there. I'll show you there. No, that's not it either. You can see that's only 0.12. Some products, I don't know where they are. Sometimes they jump out at me and I start laughing how small the numbers are. Okay, here we go. Here's one. For some reason, it calculates the dollar Swiss pairs trade. And you can see plot 1 is 0. Or in this case, minus 0.00304. And I basically cut it off after a while because it will keep on going. It'll go into 9, 10, 12, 14 digits minus. Because it was basically, I designed it to deal with atomic theory. So it gets incredibly small sometimes. My objective was at the time to remove that spooky number situation and interference, like the way you see in the double slit experiment, you know. So, and quantum mechanics. So let's see. I can hear you. Good. And I think your audio is messed now. Messed? Is it better or worse? Okay. Let's see. I hope everything is coming in clear because I can hear my audio. Nice. Yeah. Here we go. Can you hear me? See, you can hear me in the background. Okay. Let's see. I hope everything is coming in clear because I can hear my audio. Nice. Yeah. Here we go. Can you hear me? See, you can hear me in the background. There we go. Okay, so it's not me as much as it's just vacillating. Remember, the big tech companies in the United States is having a war with the public, so anything's possible. If you say something wrong, their algorithm tells the volume to probably go down. It's cracking. Okay, it was fine. Okay, prior. Okay, there we go. All right, now let's see. What else can we say about that? So I explained the spreadsheet. If there's any more questions, just fire it out. Let's make sure I didn't miss anybody's questions. Let's see, Cody said, can you explain your chart? Okay, I did that. All right, so I'm looking back on the chat line. So that's what you're looking at here. So there's a combination of, and I think I have it. Let me see. I do have it here. Let me put this up there too. I have a write-up about it, so you can just generally see it. Let's see, where is it at? Right here, and we're gonna show you that. Let's see. There it is. Let's see. Let's see, right there. And let's switch screens. You'll be able to read this, and you can see it on the recording too. So there it is, right there. And so it says a day chart. This is, in this case, this was the Nasdaq a couple days ago. Gas line 3 on day, explaining that it's a gas line 3 and a gas line 3.5. It says here a math quant cybernetic consciousness in a 4-dimensional fractional geometry, measuring movement. That's a website that we have. When the white line and histograms go, let's see, go plus, it's a buy signal, a sell signal when they go minus. The blue lines are an overbought, oversold, nonlinear time manifold. Okay, that sounds better, the way I was trying to describe it in shorthand. They reflect weakness and strength, points to come as the white line moves through them. Right, that's another trick of it all too. It's always fascinating. We'll go look at that. The bars of the day chart have a green and red dots that function as a trend flow signal, and when both are on one bar, it's a volatility vortex. I did have two classes of meteorology, I think that's what it was. A shift of wave, so I think of it as like a weather vortex. A shift, or a Star Trek one, take your choice. A shift of wavelength, it's a shift of a wavelength, and a sure sign of action to come. That's when you get the red and dot on the same bars. It all is smoothed by a stochastic standard deviation, a binary and a symbolic algebra, more, not like a binary and compounding, like compiling. Yeah, maybe more like a compiling, but I always think of it as more like symbolic algebra. And I'm using Gauss and Euler to a great extent. So there's the exact explanation I give for the whole thing. All right, so now let's shift charts again, and I'll show you that white line thing I was saying in there. Hope I'm not boring anybody. If I'm boring you, let me know. Hey, Fares, how you doing? Nice to see you. I see dollar yen. Who is in control of buyers or sellers? All right, let's go check out dollar yen, and we'll use that to describe the white lines. How's that? So you can see here, when the white line makes it through the time manifold right there, and we were getting a daily buy at the same time, which is kind of cool. You see the green dot. Now let's see if there's a red and green dot. A lot of times those red and green dots occur at a corner, at like a corner when you're walking down a street, and like not all the time, but a lot. Like you can see one here, a green and a red, and you got a nice little move up. Okay, it also landed with a daily, daily buy situation. Same thing here. You can see it did give us a move up, a little sloppier. Histogram was plus, so it's always helpful, when you see that histogram plus and a green dot and a buy and all like that. The odds are very heavy, 8.5 out of 10 that it's going to go up in value. You can see, let's see, right here, it's doing it again, but it has less life in it. Now notice that when the white line starts to break down through the time manifold here, there's weakness. Okay? And so same situation here. You start to see the white line breaking down through the time manifold, even with it plus still, and weakness starts to develop. And if it doesn't bounce off of the time manifold itself or hang on the time manifold like this, you can see where they're trying to sell it. It doesn't seem to want to work. And then it spikes up, and then bam, a big move, pushed down. Whereas here, it was right there, and then you can see the rest of the pressure comes in over the days. And vice versa. It gets through there, here, and you see the strength. So the white line going through the manifold itself can be very insightful. Okay? Now, let's go to Forest. Who's in control? Right now, looks like the sellers, where are we at on the spreadsheet? Let's just take a look. That's line 19. So it's been 4 weeks in a sell, and now 3 days in a sell. And we went into the sell off of this week in here. You can see it hasn't been the most beautiful sell. It did break down another 100 pips or something like that. But then it went into the buy, gave you a warning right there not to be short. And then for sure, obviously, it went up from there because of the daily buy. And then in the short was here again. You could take the short because we were in a weekly sell. And so that gave you a nice little profit, made back whatever you gave in this area here. And then now it gave you the short again here. And it's going down like what, 30 pips, 40 pips, something like that. Nothing was, and and you could see that it was the warning here, and it was a start. Because when you have a red and a green, like right there, and this is minus at the same time, in this case it was not. You can see on plot 1 it was 0.00, not minus 0. And plot 4 was the same way, 0.01. So, it was very little win. In this case here, you could get short off of the top of that, not the bottom of it. Because once a couple hours of trading starts, you can get short because it's breaking down. This another red dot, this histogram is minus, and the white line is cleanly through the 0 line. So that's how we follow that. I hope that makes sense to you. If it doesn't, just ask again, and we will try to give you more of a coherent point of view. Just taking a sip of my tea there. Okay. What else we got going on there? All right. I hope that explained the yen, and at the same time, the way the white line plays with the time manifold itself. Not counting the fact that you're watching the histogram and the white line for buy signals and sell signals in both the weekly and the daily. Let's try that again. The daily and the weekly. Can you show us how you would enter a trade on that chart? On the yen? Sure. Risk to reward such and such. Yes. So what happens is that due to the fact that we're in a weekly sell, as long as we're in a weekly sell, when you get sells and red dots, you can take a short, or no dot. You can take the short. I'm more of an options trader, so to me, I like to do it through the options. A lot of people here do it through spot, but when you have both of these things lined up together, you can take the short here. Okay? You could take the short here because it was in a daily sell for all this time period. And then when the white line right here, you can see here, it was, there's the 11th, and then there's Monday. It's already underneath. The histogram was also underneath at the time, I believe. And so you could play a short intraday instead of overnight short. and that's basically how it works. It's pretty simple. In this case here, you can see a weekly kicked out. We were in a weekly here, daily buy. This closes in it, so it says here that you can be long. Next day you get long. It starts to roll over, tells you to get out if you didn't take some profit in here, because I'm not telling you when to get out. I'm just telling you when it's going to change direction. So in this case, it's changing the direction on the up. In this case, it's changing the direction on the down. The broad trend is right here. We commingled the two together when it comes to hard delta or a spot or futures trading, and that's pretty much it. It's not much more complicated. I myself am a big fan of, if you're trading the hard delta, the spot, take profits fast, put a stop in to cover, maybe the length of what you made or just a little bit more, so you keep some of the profits. So, see, SLTP. Stop loss and take profit. Okay. I think I explained that. I've never traded options. Could you teach me? Laugh out loud. Sure. Options are... We've done many a webinar talking about options. There are 5 parts to understanding an option, and we call them the 5 scariest words, because the words themselves do a very poor job of explaining exactly what's going on there. And I am accepting you too there, Cody. And so, what it comes down to, let's see, follow back. Sure, why not? Where was my head at? I'm pushing buttons at the same time. What was I talking about? Oh, options. So I say there's 5 scariest words in the financial language. And that is call, put, strike price, premium, and expiration. They are the 5 main words in options to understand. Once you've learned those 5 words, what they mean, then option trading is relatively simple. But those words are so confusing to everybody, because a call defines a perspective of what to do as much as it tells you, it doesn't tell you what the direction is. Okay? And so remember, this was created by, and I always ridicule the guys, I hope they're listening, by the guys in the smoking room at the Chicago Board of Trade. 1975, Congress, towards the end of the year, decided they were going to legalize listed options again. Okay? So, they legalized listed options, and they automatically, let's see, Greg's, cool, let's see, okay, I'll send that over. Let's see, I just got a message from Robin from Chicago Quant. Okay, I'll send it now. Number 20. All right. So the guys at the Chicago Board of Trade in the smoking room, where they used to go to smoke when they walked out of the trading pit, they didn't go outside. They go into the cloakroom, and they would smoke or drink. They would have alcohol because they were, they're a bunch of drunks. So anyway, I guess that's kind of nasty to say. There was a lot of liquor back in those days, back in the 70s. And so end result is they created the options, and they gave them really weird names because they were a bunch of weird people. And so a long option, in other words, when you make money owning that option, is a call. So in other words, when the underlying product, say the yen or whatever, gold or oil or whatever, goes up in value, a call gains from it in value. Okay? And at the same time, a put, like a seesaw, is the mirror image, and it goes down in value. Now, obviously, they have not really clarified what goes up and what goes down. Now, you know the option goes up and down, but what part does go up and down? And that's what they call the premium. Okay, so when you buy a call option, you buy what they call the premium. So there's a bid and offer, like anything else in the world, the trading world, and you're buying the call premium. And so partially because the legislation that passed legalizing options on a listed exchange in the United States is based off of insurance law. So they chose to call it a premium because they look at options as an insurance vehicle. Okay? So you have a call premium, you buy or sell. You can treat it like a stock, or a spot, spot contract and so forth. And you can do the same exact thing with the put. When you're buying a put, you're buying a, let's see. Okay, let's do this. And so when you're buying a put, you're buying the put premium. Okay, now it doesn't really clarify. The bid and offer price is clarified by the premium. Okay, this is turning into an option conversation, and I have no problem doing this. And if anybody doesn't want to hear it, you can just jump in and ask a question. Okay, but I'm going to keep on explaining it to Cody until someone says a whole different, just take me off course onto something else, and then I'll explain to Cody some other time, or after I get done explaining to you what you want, then Cody can say, okay, Doc, start up again on options. Okay, so what we get is an option, again, 5 words: call, put, strike price, premium, expiration. Okay, those 5 words are really the whole nutshell of understanding what options are. Okay, and so what we want to do is we want to have that conversation, and that's what we're having right now. And so we'll just keep on having it until someone says, "Hey, tell us about something else." All right. This way, no one's being alienated because you can just just go right to it. Let's see. Now, what am I looking for here? Okay, there it is. S&P. Robin's asking for some products. RT. What else was there? Wheat. And last one was US. I'm assuming US is the 10-year? Maybe US. We're going to just put US 10-year. We'll just put it in there like that. They can come back. All right, now, let's see. What are we doing? I don't think I even saved the Russell right. Okay, so a call, when you're buying a call, you're buying its premium. When you're trying to figure out, now there's a bid and offer to it. So there's one price, all right? Now the other price is where you can call it away. That's why they call it a call. So in other words, they had this fantasy. Imagine you buy something at 50 and you buy an option that gives you the right to call it away at 50. And so then the product goes to 60. And so you make 10 points. And so instead of them calling the option the long, they called it a call, so you could call it away. And a put is the vice versa of it. It tells you when you can put it to somebody. So there's a lot of weird things like strap, straddle, strangle, strip. I mean, they were into S&M. There was a really bunch of weird people that created the names for this stuff. And so, the options are not the friendliest things to understand unless someone slowly explains it to you the way I'm doing it now. And so that is pretty much what options are all about. The idea was to create these things and then take advantage of the public from utilizing them correctly. That's pretty much the answer to it all. Now let me just save. I need to save the Russell here. So let me just go there and save the Russell for Robin. And there it is right there. I filled it in right. I remember that. File, and if anybody wants to look at the Russell, let's see, save image as, and we're just going to call that RT. Let's just call it RT. Shift RT. There we are. And save. And then what we're going to do is we're going to save it to, let's see, where did I put it? In the RTs. There it is right there. And off to Robin it goes. Okie dokie. All right, now we'll go back to any particular product that anybody wants to see. What did we have? Yen up there before? Let's just go over to Forex. I think we had the yen up there, didn't we? No, yeah. Yeah, we had the yen up there. So in other words, if you're buying at, let's use the yen as an example. So you have the 105 strike price. You have the 100. In this case, some of these products have like quarters even. So it's like 105.25, 105.50, 105.75, 106, 106.25, so forth and so on. Okay, and they call that the strike price, and that's where you can call it away. And or if you buy a put, it's where you can put it to somebody. Now, obviously, you benefit when the product is going down, and you buy a put. The put makes money as the product is dropping, and it accelerates from a slice or a tranche of value to a full 100% of the value, or 90 some odd percent of the value, depending on how much time is in it. And so, and an expiration is when the option will expire. Okay, so you got call, put, strike price defines where you can call it away from or where you can put it to somebody. Okay, and so it's like a commingling. When you're trying to figure out the price, you're looking at the strike price. In other words, if you're looking at, say, the 110 call right now in yen, I mean, it's way up there. It's probably trading for just a couple pips. It's just, it's dirt cheap over the next 30 days. It's probably almost like, 3 pips. And obviously, yeah, if the thing exploded 300 pips, all of a sudden your 3 pips is worth like 60 pips. And so now you've made, 600 fold, I don't know, something like that, 60 fold. So, I mean, that's what the problem is that the call doesn't really make you understand that it's a long. The put doesn't really make you understand that it's a put. It's a description of what you can do with it. And so there's the missing word of the long and the short in there. So people, and they did that on purpose so that they can confuse people and they could make money. They're a bunch of I can't say the word I was ready to say. They are a bunch of weasels. That's what they are. Your mic sounds like it is either too close to you and popping from air pushing on it, or it turned up too high and is cracking word. Okay, how about now? Is that better? How's that? When Yano said it was low, I moved it over to my mouth more. Does that sound a little bit better? So, I'll take a sip of my tea waiting for you to tell me it's good or bad. Okie dokie, there we go. All right, so you just turn up your volume and I keep it away from my lips. So that's the problem with options. And I think we're going to call this particular webinar an options. What are options and how do you use them? I think that's what we'll call this. What are options and how do you use them? I think that's the best way to describe this. So, and so that's what the problem is that call is the long side. Put is the short side. Strike price is the price where you can call it or put it to somebody, depending on which one you buy or sell. Remember, you can short these things just as easily as you can buy them. So, I mean, that's why people get scared of them, is because when you short them, there's a limited gain you can make out of it. Whereas when you buy them, it's an unlimited gain. So people make mistakes and they end up, they hear the crazy stories of, oh, the only thing you can do with options is sell them. It's like, no, you can spread them. In other words, you buy one option, sell another option. And what you're doing there is you're buying one strike price and you're selling another strike price. And that's what you really are doing in the end, is that you're buying a strike or a strike price. And that's why it's scary, because now people go, oh, what the hell's that? They go, I don't understand what a strike is. And so that's what the problem is. There's 5 words to master. If you master the 5 words, then you find out that you're looking behind the curtain of what reality is to the financial markets. Options are the best tool you can trade, as far as I'm concerned. And as far as, let's see, options, what are they? Yeah. I think we'll just call it that. Today's webinar is options. What are they? Let's throw a question mark at the end of it for the fun of it. And then let them figure it out from there. So that's what the problem is with options. But I think they're the best tool out there. They're for the 21st century and the later part of the 20th century. They are the reason why markets are very volatile nowadays, because what they've done is they've removed the zero-sum factor. Yes. And so let's see. I was on a roll there. So let me see if I can finish off one more thing there. So you're buying the strike price really, but you're paying a premium. And that's the bid and offer. And then expiration is when it expires. They're all defined. The moment that they're created, they're defined when they will expire, because they're like a warrant. And so you have call put, strike price, expiration, and premium. I guess you could go call, put, or you could go strike price, call, put, premium, expiration. I guess that's the best way to describe them. But those 5 words are a key right there. All right. I guess I've given you enough info for the time being, not to torture you too much. Where did we leave off? We were looking at yen. That was Formes, right? Forres. Fares. There we go. I have a hard time saying that. Am I saying it right? Fares? Fares. How's that? Or Fares. Either way, I'm trying to make it 2 syllables. Maybe it is 3. Fares. Maybe it's like that. All right. And so we've done that. How about all your euro pairs? Let's take a look at some of the euro pairs we look at. We look at the dollar euro, of course, right there. And you can see the pressure on it, and it's at towards the lows of the day. And it's been in a weekly sell since this area here. You know, this week and here it went into the weekly sell. It was in a daily sell there, which was kind of cool. You know, so it was a really nice win there. Let's see. There's the euro. And then what else we got going on? We've got Euro Zloty. Euro Zloty went into a daily buy a couple of days ago. You can see that. It's lifting up. It was in a weekly buy now, off and on a few times in here. It's been relatively tight too. But you can see here it went into the buy for that nice move, and it went into that, told you not to be long anymore up in here after that one. And it rolled slowly down. And now it's giving you the signal again to be long, because it's been in a buy for 2, 4, 6, going on a 7th week. And if you go over to line, where's it at? Line 15. So what do we have here? 1, 2, 3, 4. There's 5. So it's 6 weeks, not 5 weeks. So we're missing a week. There we go. There we are. No, wait a minute. That's the wrong product. That's how we end up making mistakes on here too. There it is below. So it's line 16, not 15. So you can see there, 6 weeks in a buy, 2 days in a buy on the fact check spreadsheet. So how is the euro doing compared to, say, the rest of the world? Good question. We've been on this kick about following the Swiss against the dollar against the Swiss, because we really think that the dollar Swiss pairs trade is really clean on the dollar. And so, let's take a look and see. Let's go to Euro GBP. It's like on the edge of something the last time I looked at it. I do remember that part. It's trying to do something, like get into a buy or a sell or something. Oh, I see what it is. It's trying to go into the sell. That's what it's doing. Look at that. So it had been in a buy since here. Went into the weekly buy, confirmed on that week. Right there. See, we don't really look at it that much. And you can see from the beginning of the week, let's see where that's the 6th, that's Sunday night, actually. Sunday night it started to show the line right through it. And we were in a daily buy right there. So let's throw the daily in. We had a warning sign too, a red and a green. That was always interesting. Sometimes they occur. They don't always occur, but 50% of the time they do. And when they do, they're usually, they're insightful. You see one here that's barely insightful, that it was turning up. Last one was here. Let's see if there's another one. There's one right there. One's trying to turn up again. Sometimes they're really insightful. This one was neat. Caught the spike. Told us that something was coming. We were in a buy and it jacked itself up, and by the end of the day it was down. Now here which is interesting. It told us about a wild day, another volatile point coming. And look at that, a big outside day there 2 days ago. So that's where we are here. Went into the buy, then it went there, and then it went into the sell for here. Let's put the lines in for you just to emphasize it. So there's the sell right there, and then it collapsed the next couple days. Then it went to the buy here, right there. Then it didn't last long. It went into the sell right there. And then, let's see, what do we got next? What is that? Is that a buy? Yes, that's a buy because both plot 1 and 4 are plus. So there's a buy there, and it's a green dot. So where was that? Right there? Yeah, right there. And the following day, it goes into a sell. Like there. And you give up a little profits there, and then it tries to go into buy again right there, is it? Yep, it does. So then it goes into a buy the next day again, and then the next day it goes into a sell again. So you get this real jerking around of action. And obviously you're only using one side of it. You'll take the buys, but you won't take the sells. You'll just get out on those. So in other words, you know, you're not going short because we're in a weekly buy here. Right there. And then if you're trading options, it's a lot easier because, you know, you're in a weekly buy, it goes into a buy, and it goes into a sell. You can hold on to the spreads, and then when it gives you the money, you can get out of the spreads. That's why options are a lot more easier to deal with. What did you call the Euro GBP? I don't know what the nickname is for that. I've heard a couple of nicknames over the years, but I'm not really sure. What Zloty is it's the Polish currency. And so then you got this for a couple days, and then it gives you the warning, and then you get a buy again there. So let's see what that looks like. So you're not short during this time because we're in a weekly buy. And so then it goes into the buy, and then you get hook linked. The next day it's starting to press down, and you know you get a little profit out of it, but nothing major there. And then it goes into the sell there. But again, you're in a weekly buy, so you're not taking the sell. And then now it's trying to get into a buy today. But now you've got the white line below the zero line. You got the histogram there. So you're not really game on going long there. You're just going to let it play itself out. And you're starting to think, I can go short if we get a daily sell. So if this thing, the white line and the histogram go minus today, and you get the red dot, or no dot, you know, you can be short because of this thing moving down. So that is the, what was that? Why did I do that? Oh, that's the Euro GBP, because we don't really pay attention to it that much. We just put it on the spreadsheet. It's on there on line 15. So 5 weeks in a buy, 4 days in a sell, and so it's been trapped in that neutral zone where you're not really carrying any position at all. But if you need to use it, or you're some type of importer exporter, and you're, you know, our work is really good for producers and users. So in other words, if you use oil or use grains, or, you know, if you use any of these products as a company, my math is really good because it you know, first of all, if you're an oil producer, you're naturally always long. And if you sell the futures against it or forward against it, then you're basically getting out of your position, really. But if you use options, then you can benefit from greater moves. And so that's what our math is all about. I invented it to fight the Higgs boson back in '77. But what I did is when I went to the exchange floors, getting involved in the exchange floors back in the late '70s, and then going and working on an exchange floor starting in the '80s, you know, back at 1980 itself, you know, I started using the options. I went to the options exchanges and started working off of options exchanges because the opportunity of a zero-sum factor being removed, I could have unlimited gain with limited loss. Whereas if you're just trading any of these products on the trading floor, you're just scalping them in and out. So I hope that makes a lot of sense there. I think we're done for the day here. I am the singing trader too. So from being on the trading floor, screaming and yelling, happy trails to all of you. Thank you for showing up today. Happy trails to you. Until we meet again. Thank you for showing up. Happy trails to you. to all my trading friends, because that's what you are.